What's up, guys? Good evening. Welcome back to another live stream. Let me see if we are actually live. Let me see. And it looks like, yes, we're live. Let me make sure that my audio is okay. There you go. What's up, guys? How are you? Good evening. How was your trading day today? Did you guys kill it? Did you guys kill it? Um, So, as you guys know, I am live streaming for you guys on Mondays and Thursdays, and I want to go over some stocks. Over here, we have a bunch of very interesting companies posting earnings today. I just took a look at the report of COINBASE. Square also posted earnings. PayPal is getting killed after hours. So, please drop a comment down below and let me know if you want me to go over any given stock. In Today we had another red day across the board, guys. You know that yesterday Mr. Jerome Powell gave us a very sizable red day across the board, and today we just saw follow through because of the hawkish tone that the chairman of the Federal Reserve used yesterday. So we had another red day across the board. Russell 2000 went down 0.53%. The Nasdaq went down 1.73%. Dow Jones went down 0.46%, and the S&P 500 went down 1.06%. The Dixie, the US dollar, went up today a lot. That put downwards pressure over precious metals and commodities. So crude oil went down 2.16%. Gold went down 1.05%, and silver went down 0.48%. The 10-year Treasury yield also went higher. It went up 1.60%, and it closed the trading session at 4.12%. As you guys know, as long as the 10-year Treasury yield remains above 4%, we are going to see a lot of downwards pressure over growth stocks, higher multiple stocks, and tech-oriented stocks. And you guys saw what happened today with Google and Amazon, Apple as well. Microsoft also got killed today. So we're seeing a rotation from these big tech stocks into cyclical and defensive stocks. But aside from that, the fact that the 10-year Treasury yield is signaling that the Fed is still behind the curve is something that both the 10-year Treasury yield and the 2-year Treasury yield both are indicating that the Fed is way behind the curve. So, yet still, even though the Fed has been very aggressive throughout this year, hiking rates, so that is obviously very negative for the big tech stocks. And I think that the worst is still yet to come for the big tech names out there. If we take a look at these sectors of the markets, take a look, guys. We can confirm what I just told you. The rotation that we are seeing as of now from higher multiple stocks, growth-oriented stocks, and tech stocks into a cyclical and defensive sector. So the best sector today was energy, went up 1.85%. By the way, we only had four sectors going higher today. Energy was followed by industrials, another cyclical sector, goes up 1.05%. Materials, another cyclical sector, goes up 0.76%. And utilities, this is a very defensive sector, like the most defensive sector out there, goes up 0.44%. And on the flip side, take a look. Communication services, this is a higher multiple sector, goes down 2.45%. Technology absolutely crushed. Google, Amazon, Microsoft, Apple, you name it, uh, went uh, went lower today. The tech sector went down 2.96%, and consumer discretionary. You guys know that the heaviest holdings inside this sector are Amazon and Tesla. So this sector went down today 0.60%. I think that Tesla was actually able to pull off a green day, but yeah, Amazon is is a very heavy stock in this sector, and Amazon and market cap wise is even heavier than Tesla. Yeah, Tesla went up only 0.15%. So, what do you know, guys? Another red day across the board, and tomorrow we have the jobs report of October. What's up, Atlanta 008? DraftKings done me good today. He says, Lena Marie, what's up, Lena? How are you? Isaac. So, in your opinion, is it the end of the bear market Christmas rally? Um, I don't know. I am very bearish about the markets as of now. I have been very bearish since April approximately. Tomorrow we have, guys, the jobs report of October. That is going to be very important, like extremely important. So don't look at the futures later on today. They don't matter. Basically, this jobs report is going to be extremely important. Powell said yesterday over and over and over and over again that they need to weaken the labor market. It hasn't happened yet. And this jobs report might imply a relief for the rally, or this, let's just put it this way, if the bulls happen to get good news tomorrow from the jobs report, then we might see this rally still alive, maybe for a few weeks, who knows, or maybe until the next CPI data report. I think that the next CPI data report comes out on the 10th, guys, of November, but don't quote me on that. I need to double check on that. So, um, what the markets are expecting tomorrow is 200,000 new jobs in October. Keep in mind that the jobs report of September came in reflecting an increase when it comes to jobs of 260,000, right, from August to September. So if that report tomorrow happens to show any figure above 260,000 jobs, guys, that is going to be very, but very bad news for the bulls. I can see a further decline when it comes to the S&P 500 and most importantly the NDX. And there is a metric that is going to be very important tomorrow, guys. Put this down on a sticky note: average hourly earnings. That is I would say that that metric is as important as the jobs report itself. So what the markets are expecting when it comes to when it comes to average hourly earnings is 0.3%, an increase of 0.3% month over month. And last month we saw also an increase of 0.3% month over month. So let's say that the report comes out showing 300,000 new jobs. And on top of that, we see average hourly earnings coming out at 0.4%, 0.5%. This is going to be an absolute bloodbath tomorrow, most likely, guys. So keep that in mind. However, on the flip side, what happens if we happen to see a weaker than expected report? Let's say that we get, I don't know, 70,000 new jobs in October, and average hourly earnings comes out at, I don't know, 0.1%, 0.2%, or maybe negative. Who knows? That would be great. So if that's the case, we're very likely to see a massive rally tomorrow. That would be very helpful for the bulls. Taking into account that Powell sounded like an absolute hawk in the FOMC meeting that we saw yesterday. So that's the situation for tomorrow, guys. It is very difficult to talk about the indices, S&P 500, NDX, or the Triple Q, or the SPY. Everything is going to depend on whatever the jobs report shows tomorrow at 8:30 a.m. Eastern Standard Time. And what do you guys think? What the report is going to be looking like? What was that number for jobs report? I already told you guys. There you go. So remember, 200,000 is the estimate. And when it comes to average hourly earnings, 0.3%, an increase of 0.3% month over month. That's what the markets are expecting tomorrow. That is going to move the market a lot. I would even say, guys, that this jobs report of October is even more important than the CPI itself, for real. Powell spoke about the labor market yesterday over and over and over and over again. So the two facts that we need to have on the table for the Federal Reserve in order to actually think about making a pivot would be inflation coming down in a, let's say, in a clear way. When I say a clear way, I'm talking about three consecutive inflation reports showing that inflation is decreasing. So that is one possibility. The other possibility would be the labor market weakening in a very noticeable way. If any of those two factors happen to occur, the Fed is likely to, let the markets know that they might be about to make a pivot, or maybe not a pivot. A pivot would imply decreasing rates, which is something that is out of the table as of now. But maybe the Fed might be announcing a pause, in which case the markets are very likely to start to recover. So, yeah. Do you know if they take seasonal hiring into consideration with that estimate? Yeah, they take it into account. Yeah, sure, absolutely. Yeah, it comes into account. What do you guys think? Do you think that the report is going to turn out better than expected? And as I just told you, the report of September showed an increase of 260,000 new jobs in September, and now we are waiting for 200,000. So, I don't know, guys. I am kind of. I mean, I live in North Carolina. I live in Charlotte, and every single time that I drive my car around and stuff, I see the signs everywhere. Now hiding, now hiding, now hiding, now hiding. So I don't know. I am a bit skeptical here. I don't think that the labor market is weakening, but at some point we're gonna have a surprise, guys. So the Fed is hiking rates on a constant basis. We know that the economy is weakening. We know that for sure. The thing is that the economy isn't weakening at the pace that the Federal Reserve would like to. But at some point, yeah, unemployment is going to start to go higher. And that, in my opinion, whenever we perceive that unemployment is going higher, that is going to be a big buy signal for stocks, guys. Long term wise, obviously. I am not talking about trading. We are trading every day, and we buy calls, buy puts, so forth. But any sign, guys, that the labor market is weakening or that inflation is coming down on a constant basis, in my opinion, is a buy signal, because that would be telling the Federal Reserve that it is time to make a pivot, or maybe at least to make a pause. Correct. I mean, the news states this constantly. Yeah. I don't think the report will come out better. Atlanta 008 says a lot of vacant jobs are still out there. Um, yeah, but remember, bro, what the jobs report is about. Um, yeah. So we were talking about new jobs, so people that was actually hired. I mean, yeah, you can make that case. Um, yeah. Keep in mind that we also got on Tuesday the job openings report, and that was another mess, guys. So the job openings report showed that we have 10.7 million job openings as of now in the U.S., and the analysts were expecting 9 million um, job openings available. So yeah, the labor market doesn't seem to be weakening, and this is a serious issue over here. So yeah, that W fits up. I'll be upset. Seems like market is always confused after data. Um, I was taking a look, guys, at the last two jobs reports. So the jobs report of September that came out in October, and the jobs report of August that came out in September. And on those two trading sessions, the markets went lower, and a lot lower, guys. I'm talking about on average, we had a decline of 1.50% on the last two jobs reports. So we can make the case that if everything happens to occur the way that it did, during the last two jobs reports. We might see another red day tomorrow in the markets, but we don't know. Maybe the bulls can see a surprise tomorrow. So we don't know. That might be the case. Who knows? So, guys, do you want me to go over stocks? Because we have a bunch of stocks posting earnings after hours. Coinbase, what is going on in the case of Coinbase? So, Coinbase is Coinbase doing anything interesting after hours? No, it is pretty much flat. It hasn't gone anywhere. So Coinbase went down today 8.09% and it closed the trading session at $55.80. Pull up here the live news tab. So what did Coinbase do? So they are losing money as of now. They were losing money last year, bull market with Bitcoin at very trading at very high levels. So EPS, negative EPS, came in at $2.43, missing the estimate of $2.40. And sales came in at $590.34 million, missing the estimate of $659.88 million. This was a very nasty report, guys. They missed across the board, top and bottom line. Let me see if I have any other specific information. Let me see. So Coinbase expects full year 2022 annual average monthly transaction users to be slightly below 9 million. Expects subscription and services revenue to be more than 700 million, but I don't have the competitive over here. Let me see. Coinbase reports Q4 total trading volume of 159 billion dollars, monthly transaction users of 8.5 million. I don't see any guidance related information here, guys. Let me see reports Q4. So they missed across the board over here. And I have a position on Coinbase, guys. I didn't get in the casino, but since I own 100 shares of the stock of this company, I sold a covered call a bit before the closing bell. So I am rooting for Coinbase to go lower so I can buy back the call that I sold. But I don't have. Let me see. Coinbase prepares for likely worse 2023. Q3 revenue drops more than 50%. Oh my God. Unbelievable, guys. So Q3 revenue dropped more than 50%. Jesus Christ. And the stock is higher after hours. So, I mean, a bit higher, nothing crazy. After hours, if I pull up a 4 hour chart, and mind you, guys, when it comes to the earnings reports that we are getting after hours, um, all of these reports are going to be very affected by the jobs report that we are going to get tomorrow at 8:30 a.m. Eastern Standard Time. So if any given stock is flying after hours because they beat on expectations, if the jobs report tomorrow happens to come out nasty, then we are going to see the markets eating alive any after hour gains that any given stock could be seen because the jobs report tomorrow is going to be a big, but I mean a huge market mover. So in the case of Coinbase, if the stock of this company happens to go lower tomorrow, $52 is a big spot for Coinbase. This is a previous support back from late July, and this is also a previous resistance back from mid June. This is a very ugly looking chart. We are seeing over here a primary downtrend below all the moving averages, downward sloping 200-day moving average, downward sloping 100-day moving average. Coinbase is trading as of now below a declining 5-day moving average. Very ugly looking chart. The only thing that we could say a positive about Coinbase that might suggest that we are about to see a bounce back up would be the RSI. Coinbase is a bit oversold on the 4 hour chart. We can see the RSI sitting at 25 points. So if the bulls of Coinbase can shake off this very poor report, as long as I can see, the next important resistance is going to be 61 bucks. 61 bucks is a previous support that has acted as such on one, two, three, four, five, times, and this is also a previous resistance back from late June. So watch out for this area at around $60, 61 bucks. If maybe tomorrow we happen to see a better than expected or worse than expected would be the case. Worse than expected jobs report when it comes to the jobs that were created during the month of October, and better than expected when it comes to average hourly earnings. So if the reaction of the markets happens to be positive, then maybe Coinbase can take out $60, $61, and maybe we can see a push up to $67, 100-day moving average. This would be a what a wow an 8% profit trade. So these two levels are going to be very important tomorrow for Coinbase, guys. Either $60 ish, or maybe $52 acting as lower support. Christian says, I don't think it will be a declining job report. However, I think that it's baked into this current sell-off. Friday OPEX may provide some upside. We don't have options expiration tomorrow, Christian. Yeah, when you say options expiration, we are talking about every third Friday of the month. So we don't have options expiration tomorrow. Yeah, I mean we don't have a huge number of options expiring tomorrow. It happens on every single third Friday of the month, and four times a year we have quadruple witching, which is a day in which we have a massive expiration of options of indices, ETFs, stocks, futures, etc. So I don't think I mean it depends on how nasty the report could be. I don't think this is baked in, Christian. No, I don't think so. The problem that we have as of now when it comes to the Fed, guys, is the fact that Powell stated very clearly, yes, in a very clear way, that he's going to keep on hiking rates until we don't know. He will just he will just keep on hiking rates until either inflation goes lower or the labor market weakens. But none of none of those two conditions are on the table as of now. So if this report happens to come out, as I just told you, reflecting a very overheated labor market, I think that we are very likely to see another leg down in the markets. I don't think it is baked in as of now. I mean, that's at least my opinion. Lina Marie, Square beat by 75%. It's down. Yeah, I mean, I saw it going higher, Lina. Before starting this live stream, Square went down to the 1.34%, and it closed the trading session at $53.91. Pull up here the live news tab. So what did they post? So block transaction based revenue was, what is it at? Let me see. Square. So sales came in at $4.51 billion, beating the estimate of $4.50 billion. EPS came in at 42 cents, beating the estimate of 24 cents. So this was a beat across the board, top and bottom line. Let me see if I can see any guidance related information. Let me see. So Black transaction-based revenue was 1.52 billion in third quarter, up 17% year over year. That's acceptable. And transaction-based gross profit was $616 million, up 13% year over year. Yeah, this was a nice report. So maybe guidance was weak, guys. But I don't have any guidance related information here. Adjusted EPS, revenue climbs, beating street estimates. Black stock rockets higher after earnings as Cash App card shows strong growth. Yeah, but Square, I don't have guidance. At least I don't have it available quite yet. Let me see. Yeah, it is going higher. The one that is going lower is PayPal, guys. PayPal went up initially and now is getting killed after hours. But in the case of Square, we have it up 12% after hours. So yeah, this was a very decent report. However, guys, and as I just told you, keep in mind, if the jobs report tomorrow happens to come out way harder than expected and reflecting a greater wage inflation than expected, then the markets are going to dump, in my opinion, every single stock out there, including any stock that could have posted good earnings after hours today. In the case of a Square, the next important gap over here is going to be up to $66. Let me draw a line over here. So $66 is a previous support back from mid-May, and this is also a previous support back from late July, and also a previous support back from early September. So this is going to be a tough spot for the bulls, most likely, even if the markets happen to go higher tomorrow, because this previous area of support happens to coincide with the 100-day moving average that, on top of that, is declining. We can also see over here, obviously, a primary downtrend, downward sloping 200-day moving average, downward sloping 100-day moving average. This is going to be a very tough spot for Square, and we also can make the case that Square is up after hours, something like 5 or 6%. So we might see profit taking tomorrow as soon as the trading session opens if Square doesn't happen to be lower um, because of the jobs report, obviously, right? $54 is also a previous area of support that might be acting as support. At $54, the bulls already found support on 1, 2, and 3 occasions. So watch out for these levels. In the case of a Square, guys, maybe $65 in order to buy puts. This downward sloping 100-day moving average is going to be a very tough spot for the bulls. Or maybe if the bulls can't take it out, if we happen to see a massive rally tomorrow, who knows? Maybe we get a surprise on the jobs report. So if this 100-day moving average happens to be taken out, we have room up to $75, which happens to be a previous resistance back from early September and also back from mid-July. And this is also a previous support back from late May. Very ugly looking chart. So they posted a decent report that at the end of the day, guys, we have the 10-year Treasury yield way above 40%. Um, we got very bad news from the Federal Reserve yesterday. So most of these stocks are going to move depending on whatever is going on in the markets. And on top of that, we are seeing a clear rotation from, as I just told you guys, growth stocks, tech-oriented stocks, and higher multiple stocks into cyclical and defensive sectors. So I don't know. I think that Square is still guilty until proven innocent. Yeah. Anytime. It's Microsoft a buy right now, maybe just DCA. It depends on your time frame, Tide. What's your time frame? If you were to buy Microsoft, are you talking about a trade, a short-term trade? If you're talking about a short-term trade, bro, take a look at this chart. This is an absolute mess. Primary downtrend below the moving averages, 200 downward sloping, 200-day moving average, downward sloping, 100-day moving average, downward sloping, 50-day moving average. This is a total disaster. We can make we can make the case, guys, that most of these big tech stocks are very oversold as of now. Take a look at the RSI of Microsoft on the 4-hour chart, 22 points. This stock is very, but very oversold. I'm going to pull up here a 3-year chart. So what would be the next potential support for Microsoft? What about $210? I'm going to draw a line over here. You guys know that I am improvising here. $210 is a previous support back from January of last year. And this is also a previous resistance back from July of 2020. Oh my God. So this would be a zone, this would be an area in which buyers might be potentially stepping in, $210. But if you want to buy Microsoft for the long term, let's say, I don't know, 5 years out, 10 years out, yeah, this is a buy. We have an acceptable discount over here, EPS wise, um, or P ratio wise. We can make the case. Um, so for the long term, yeah, maybe. But if you want to take a swing trade or a short term trade, be careful. I mean, you can try to trade it. This stock is due for a bounce, very oversold. Maybe if the bulls can find support at $211, we can make the case that if Microsoft keeps on dropping, and if it happens to pay a quick visit down to $211, the RSI is going to be even lower, and that is going to increase the likelihood for the bulls of Microsoft to find support at a previous area of support and then bounce back up. That might be a potential quick trade on MSFT. However, you need to apply a stop loss, a very tight stop loss, if you're thinking about a short-term trade, because this short is absolutely broken from a technical standpoint. So since you're talking about you're talking about DCA, I don't know. I wouldn't buy here. You guys, you don't need to catch the very bottom of a stock, guys. I would rather wait for buyers to show up. As of now, this short is under the absolute control of sellers. So I would rather see some signs of life over here. I would prefer seeing Microsoft at least taking out a moving average, maybe the 5-day moving average, which as of now is has a declining position. So if this stock happens to burst above $225, as I just told you guys, declining 5-day moving average, that is going to be a positive sign that buyers are starting to step in. That would be the way that I would be interested in picking up Microsoft over here. I wouldn't be a buyer at around 211 bucks unless I apply a very tight stop loss over here. Thanks. I can't afford the trade. Atlanta 008 says, yeah, I guess. No way short term. That's correct. No, no, long term. Yeah, long term. If you're thinking about 5 years out, 10 years out, yeah, why not? What's the P ratio of Microsoft looking like as of now, guys? Let's see the P of our MSFT. Let me see over here. So Microsoft, we have a P ratio of 23. I mean, I'm not gonna make a fundamental analysis of Microsoft over here, guys, but this is acceptable P. We can make the case. A bird would argue, guys, that if the Fed keeps on that if the Fed keeps on hiking rates and if the economy keeps on weakening, then we cannot figure how deep this multiple compression process is going to go. So, and that would be an acceptable take on any big tech stock. But a P ratio of 23 in the case of Microsoft, you're thinking about maybe 5 or 10 years out. Yeah, you could start buying some shares over here for the long term. And if you aren't going to apply a stop loss, you're going to have to be very patient because this chart is absolutely broken. So sellers are in absolute control of Microsoft. Anytime, bro. Absolutely. Yeah, absolutely. Atlanta 008 says, I love Microsoft as a stock. It looks like it's at a good bison, but I'm skeptical. It may drop a little more. Yeah. Okay. We already went over Microsoft. Wow. A bunch of guys over here, guys. So thanks for tuning in. AMD and DraftKings. DraftKings is posting earnings tomorrow, guys. By the way, I'm thinking so, and remember, so whatever DraftKings post, this is a company that has been posting very good earnings recently. However, you guys know that online gambling in California is a key aspect of the let's say of the core business that DraftKings is trying to build up as of now. So I am curious about what they are going to be saying when it comes to online gambling in California. It looks like there are a lot of political pressures out there in order to prevent DraftKings from having a commercial operations in California. You guys know that California is a very big state. So I am very curious about what DraftKings is going to be saying during the press conference about online gambling in California that might move the stock of the company. And as of now, the bulls couldn't take out this downward sloping 200-day moving average, $16.35. They lost this level today. DraftKings went down today 1.57%, and it closed the trading session at $15.67. Um, Buyers showed up. We can see an ascending 5-day moving average. The bulls are holding this 5-day moving average as support. The bulls are also holding this 100-day moving average as support as well. So as long as the bulls remain above these two moving averages, we can make the case that buyers are still trying to remain in control of the technical short of DraftKings. And on the flip side, If $15.17 happens to be taken out, then sellers might start to regain control of DraftKings. And in that case, we could easily see DraftKings dropping down to $12. $12 happens to be a previous support back from October. So this is a chart in which buyers already started to show up. But this is going to depend on whatever DraftKings or whatever is going to happen with DraftKings in the short term is going to depend on the earnings report, and the markets. The markets are going to be paying close attention to whatever DraftKings says about the legalization of online gambling in California. So check this out. On its last earnings report, DraftKings went higher. On its second to last earnings report, DraftKings also went higher. Three reports ago, it fell off a cliff, and four reports ago, it also fell off a cliff. So 4 out of 2. What do you guys think? The DraftKings is going to be able to um, surpass expectations? Is any of you guys in the casino with DraftKings? Ouch! If it goes to 12, let's see what the report says tomorrow. Yeah, I am going to be. As I just told you guys, I own some shares of DraftKings. By the way, I am holding the bag over here. I am at I am trapped at what, like $30, I think, $28. I haven't purchased more shares because I never average down on downtrends. That is something that no one should do. That is a losing strategy. So I'm just waiting for DraftKings to reverse this major downtrend in order to average down my position over here. And I like the company long term wise. And let's see what happens, guys. The online gambling, let's say, section of the business in California is going to be very important, and who knows if that is going to be if that is going to be passed, because I know that there are a lot of political pressures in California. You know that we have the midterm election in less than a week, so let's see what is going to happen on DraftKings. Dixie is showing some strength. Oh yeah, it went higher today once again. The US dollar. Let me pull it up here. And today the Dixie, I was curious about the Dixie, guys, because you guys know that the Bank of England on hiked rates by 75 basis points. And yeah, the British pound started to go higher. And I was thinking earlier on today that maybe if the British pound um, had gone on a tear, that was going to potentially put downwards pressure over the Dixie, and that would have represented a relief for the American stock market bulls. But that wasn't the case. The Dixie is about to burst above a very important level, guys. 113 points. This is an area in which Dixie already failed on 2 occasions. And keep in mind that if the Dixie can take out 113 points, and if it starts to consolidate slightly above 113 points, we have another gap up to 114 points. This is a previous resistance back from late September. If the Dixie, guys, happens to fill this gap, then we are very likely to see lower prices in the markets on everything, guys. You guys know that the Dow Jones and some cyclical and defensive sectors have been having a decent behavior lately. They both the Dow Jones and the cyclical and defensive sectors got killed yesterday, obviously because of the Federal Reserve, but they have been holding decently recently. And yeah, if the Dixie goes up to 114 bucks, I think that yeah, most stocks out there are going to fall. You have to keep in mind, guys, that 30% of the companies that trade inside the S&P 500 obtain their revenue from overseas. So if the Dixie goes higher, this represents obviously a big issue for a lot of companies that trade publicly here in the U.S. Obviously, because they are receiving a very important part of the revenue denominated in foreign currencies, and then they need to bring that money back to the US. And a very strong dollar obviously represents a huge inconvenience. So If the Dixie keeps on going higher, very bad news for the Bulls. And mind you, guys, we have another. So we have a first gap up to 114 points. But what happens, guys, if the Dixie happens to fill this other gap up to 121 points? This would be catastrophic for the for the U.S. Bulls, no doubt about it. So, 2 year Treasury yield has also shooting start on the daily, says Christian. Yeah, I think, yeah, it also went higher today along with TNX. Let me take a look at TNX over here. I didn't check this chart today. Let me see. I take a look at the 10-year Treasury yield, guys. Unbelievable. 4 point. We have unfinished business. We can make the case at 4.35%. Jesus Christ. So we'll see what happens, guys. Take a look at how the Bulls failed at 4.33%. This is a previous resistance in the case of the 10-year Treasury yield back from 2008. What happens, guys? If the 10-year Treasury yield takes out 4.36% and it fills the next important gap up to 4.95%, Jesus. Wow. We would see way lower prices in the NDX, like for sure. We just say the 5 or 15 minute zone is the best to look at day for trading, guys. My style, and you don't need to copy what I do. I day trade using the 1 day 1 minute. This is the chart that I use, guys. hmm Yep, 1 day 1 minute. Okay, this is the time frame that I use in order to day trade, and this is what has been working. That has been working out for me. Some traders use the 5 day 5 minute. I know of I know about other traders that use a 15-minute chart. But yeah, this is my favorite time frame in order to day trade. 1 day 1 minute. It is very reactive, but I don't know. I mean, this is the time frame that has been working out for me. So this is what I use. Yep, on a daily basis. DraftKings is a disaster. I did have faith in it. I mean, I have stocks, but I traded too. Sure, I don't mind trading DraftKings. What I am not going to be doing, guys, is buying more shares in a downtrend. Yeah, I am not going to be trying to decrease my cost average because this stock is still in a downtrend, and that is something that no one should do. No one should that or cost average in a downtrend. So there you go, guys. I'm very Stu. Atlanta 008 says, if you have any other request about any other stock that you want me to go over, please let me know before I wrap it up. And in the meantime, let me take a look at the S&P 500 to let you guys know what I am thinking about tomorrow into the ops report of October. And there you go. So I'm thinking, guys, that if the report happens to be catastrophic for the Bulls, if it happens to come out very overheated, the June low is going to be a very important spot support wise for the Bulls. We're looking at 3,639 points. If this support happens to be taken out, this is going to be good night, Irene, for the Bulls. We might see way lower prices, guys. Maybe 3,574 points. This is a previous support back from late September. And on the flip side, if the Bulls happen to get a positive surprise from the jobs report, I think that the most important task that they would have to carry out to the upside is going to be this semi-declining 5 day moving average at around 3,820 points. So those are the main levels of support and resistance that I am going to be keeping a close watch on tomorrow. They traded two puts of Triple Q today. I closed them. I didn't want to get in the casino of the jobs report. But yeah, I already told you guys that I am not positive when it comes to the report. I think that the labor market isn't weakening enough. And by the way, guys, you guys know that we got the ADP report on Wednesday. The ADP report is a jobs report, just like the one that we are going to get tomorrow, but that reflects the jobs creation of the private sector. So that report alone, guys, reflected 292,000 new jobs, if I remember correctly, during the month of October. So when it comes to the private sector alone, the private sector already surpassed the amount of jobs, of new jobs that are being expected in the jobs report of October. You guys know obviously that the jobs report of October is comprised of both the private sector jobs and the government jobs. Okay, so if the ADP report happens to be a leading indicator, we might have some fun with put options tomorrow. Danny Sinclair, Tesla. Sure, absolutely. So let's go ahead and wrap it up with Tesla, my Tesla. Let me see. TSLA, there you go. So Tesla pretty much closed flat today, goes up 0.15%. And it closed the trading session at $215.31. And in the case of Tesla, guys, this chart is starting to look very ugly once again. The bulls lost today the 5-day moving average. They closed the trading session below VWAP. We are also seeing obviously a primary downtrend below all the moving averages. Downward sloping 200-day moving average, downward sloping 100-day moving average. So if the bulls cannot reconquer tomorrow $223, put this number on a sticky note, guys. This is going to be a very important spot. 5-day moving average, $223, coinciding, by the way, with a previous support back from mid-July. So if they fail at reconquering this area, we might see further downside, maybe down to $206. $206 happens to be a former support back from late May, in which we can make the case that that buyers might be stepping in. The RSI of Tesla is sitting at 39 points. We can make the case that Tesla is neither oversold nor overbought. So we could see lower prices, and obviously this is a very expensive stock, higher multiple stock. So if the jobs report happens to come out hotter than expected, Tesla is a strong candidate in order to see lower prices. I would be inclined, but I would be thinking about $206 in order to try to take a bounce back up trade. And when it comes to put options, watch out for Tesla, maybe failing at $223. That might be an interesting spot in order to buy some put options. And with Tesla Mayesta, guys, I am going to wrap it up. So thank you very much for joining me today. Remember that I am going to be live streaming for you once again on Monday at around 4:40 p.m., give or take. So good luck tomorrow, and take high probability trades and stop gambling, guys. I'm always telling you that. Stop gambling, please. So see you guys on Monday, and obviously we're going to be in touch throughout the trading session tomorrow in the main chat of our Discord. So take care, guys. Thank you very much for joining me. Goodbye. Enjoy the rest of your day. Bye bye bye. Take care. Bye.